What's going on YouTube? This is Dave's Daily Trades, where I bring you daily AMC technical analysis, price predictions, and of course, the latest and greatest news. If you'd be so kind enough to hit that like button and subscribe, I'd be greatly appreciative. All right, so into the charts. And as you guys can notice, different view to start off. So right now I am looking at the NASDAQ, the S&P 500, and then of course our favorite AMC. So really a few things to note here, guys. One, every single stock, and I'm just using the S&P and the NASDAQ for examples here, but look at every stock after hours and pre-market this morning. Look at this. We're just going to start here with the SPY, this massive dip here. Of course, same thing with AMC, and guys, same thing with the NASDAQ here. So what's going on? Because it's literally happening in every single stock, just about, that I've seen so far. And this is constant, where we're following the same trends, and these stocks are not correlated directly. So they shouldn't have this same type of pattern going on, and this really shows me that something is up. So really curious as to what's going on here, and that's something that we're going to be diving into more on today's video. All right, so we're actually going to jump over and just do a quick AMC technical analysis video here. So, of course, yeah, really scary start to the day for all you newer apes. For the big apes, OGs, guys, this is nothing. Yeah, it was down 11% in pre-market. Didn't really look great today. But wow, what a roller coaster. I believe for the entire day, from the lowest point to the highest point, we were up just about 23%. So definitely had a really nice rebound. So, a few things to note here. Of course, yes, I did get rid of that wedge-shaped pattern that we were tracking, because on Monday, not Monday, market was closed Monday, Tuesday, we really traded down out of that range, so that really kind of took that off the target. But we did touch, or come very close to touching, the support line I have at right around $38. So that was really good to see that hold, especially since we've literally seen a lot of red candles these past couple days. So I'll take that, absolutely. Another thing to note, we did get stopped right about at that $50 range. So that's looking like it is now turned into resistance, which was one support. So this is going to be a range, the next range at least, that we are going to have to break out of. But if we look down here at the technicals, guys, I actually love seeing this. So, of course, first thing over here, OBV, guys, look at this. We are not selling, apes are not selling, institutions are not selling, because this right here is staying flat. And actually, I know this is probably a little small on your screen if you're watching on your phone, but we did actually have a little bump up today, and that's sitting at right about 5 billion. RSI, that is starting to kick back up too, and especially from today. So we did hit a low right here of 45 on the RSI, which is really just about close to the lowest level, which is right about at 41. So we were looking like we were going to bounce off that 41, but bounce a little sooner at 45. I like to see that. And then the MACD. Of course, this was massive. So, of course, when we had that first run up, we were at right about 2.61. From this last run up to 72. We had a high of 11.56, but now we're coming back down to more realistic times, sitting right now at 3.27, which is really good. And of course, the biggest thing I'm looking at on the MACD here is you see all of these green candles here, how they go up, go up, go up. And then once they start to flatten out, that's really about the time where we start to dip down and go the other way. Now, here's the thing with the red candlesticks, same thing. But as you guys can see here, look at those candles. They are literally the same. So that what I'm reading from this, at least, is this is something where we are about to reverse on the MACD here, curl back up and around, and then shoot up. My price predictions for tomorrow is, of course, Fridays, typically low volume, nothing too crazy. So I think, of course, we are going to take another hit at that $50 range. And I think overall, it's going to be mostly a flat day. I could be wrong, but that's my personal predictions for this. Of course, I really think we are going to trade in this range for a little bit. But once we break out of 50, we're I think, immediately going to take a retest right at 60, and that's really going to decide, and that's, I think, going to be probably what's going to be the end of this week and early next week of what we're going to see. So definitely stay tuned for that, guys. It's going to be interesting. Of course, we will take a look at the 1 hour chart just to see what's going on, what this looks like. But the 1 day is really looking good from all the technicals, so I really like to see that. All right. So, guys, this is what we got here for the 1 hour chart. So, nothing too crazy. Really, the best thing that I'm seeing from this, guys, is really this reversal. I mean, since we had this retest here on June 29th, where we did hit $60 or a little above $60 as a high, we've literally just been continuing this downward trend, literally until this morning, where we actually had our first, like, 3, 4 candlesticks of green on the hourly chart in a row. So that's really great. Of course, looking at the technicals down here, yes, we did have a MACD crossover on this. If we can get back into this neutral zone, we could have a nice run up, pushing us back into that $50 range. RSI, again, looking to break back into that 50 range. We're literally at 49.03 now, so that should be the break to bring us back into that bullish territory and continue this run up. All right, guys. So, of course, there is a couple additional things that I did want to cover. So, one thing that I saw online today was Citadel's positions and why that's important. Because, like I said at the beginning of this video, there seemed to be a lot of correlation with this morning and previous dips that we've seen. And previously, what happened, if we take a giant step back into April, about the middle of April, this is the last time where we saw this sea of blood, as many say, where the entire market, I'm talking global market, is down. So what happened previously was there needed to be some liquidity requirements met by April 22nd. So it was 3 or 4, I can't remember exactly, 3 or 4 days where the entire market was red, and we did have about a 8% correction in the overall market. So guys, I personally think that Citadel, as we love to call them, was really trimming their positions to meet liquidity requirements so that they weren't completely liquidated from their AMC and GME short positions. So what I have in front of me right here is most of the larger positions that Citadel has right now. Excuse me. So as we can see, guys, literally all red. So I know the entire market was red, but I think that a lot of Citadel's position was red because they were selling out, and this brings down the overall market. And this is exactly what is going on. There is another option, of course. This is option 1, where they're just selling off assets to meet certain liquidity requirements. Number 2 is they are selling off to start to cover, which would be the ideal solution, which means the squeeze would be coming very, very soon because they're going to have to cover all these shorts. But I absolutely doubt that they're doing this because that would mean they're giving up. And I personally do not think that this fight is over. I think we still have some time going here, guys. So that's my personal opinion here. The last thing I want to cover is this Reddit post right here on Superstomp, guys. This is really just all screenshots just to confirm the thesis that I was talking about earlier, where almost the entire market is correlated with that dip that we saw in the morning. And this is actually from yesterday when we had that. It was like a 10:30 dip. So look at this. This is all screenshots. S&P 500, Dow Jones. Look at this. Literally 10:30. Every single stock. Goldman Sachs, 10:30. Bank of America, same thing. Morgan Stanley, Citigroup, UBS Group. Literally, guys, this is 100%. But the biggest thing, too, is look at the charts. They are so directly correlated, it's not even funny. The entire market, and yes, this is going over the banks. So, yes, these are going to look a little similar. But, guys, not all of these stocks are all bank stocks that are looking like this. It's absolutely insane. This entire market, for whatever reason, I personally think it's because all these hedge funds are literally manipulating not just AMC and GME, but the entire market, guys. So this is just a theory. I cannot prove this. And of course, I am not a financial advisor, and this is not financial advice. But this is just from looking at the charts, what's going on right now. And it's honestly really concerning. I'll also link this because there are a ton of screenshots, and I want you guys to check this out for yourselves. But just some absolutely insane stuff right now. Really, guys, take the price that we're seeing right now with a grain of salt. This is really just psychological stuff going on right now. We already won the game. Shorts have to cover, and they have not covered yet. And that's really the only piece of news that you will ever need to be convinced about AMC or GME. All right, guys, with that said, that's going to be all for today's video. If I did provide any helpful, useful, funny information, definitely hit that like button and subscribe, and tune in for the next one. Peace.